Welcome back to the channel that simplifies the stock market. Now, if I could only buy one stock, I would bet it all on Google. This video is all about Google. The parent company is actually called Alphabet, but most people know the company as Google, so I'll refer to it as Google throughout the video. We'll talk about what Google does to make money, how Google has performed in the past in terms of growth. We'll look at their financials and see whether they're weak or strong. Then we'll look at their prospects for future growth. And then to wrap it up, we'll look at their stock price to see if it's fairly priced. And we'll also look at a little bit more information. Now, throughout the video, I'll give my personal ratings for Google on each of the topics that I just listed, but your opinion will likely differ from mine, so I encourage you to give your ratings as I give mine. And in the end, you'll be able to decide for yourself whether you want to buy Google stock or not. I'm also going to be using Up365 throughout this video in order to look at Google. Up365 is a completely free stock market mobile app that helps you to look at the companies and stocks in the stock market. Now let's get into it. Now the first thing we need to do is we need to find out what Google does and how they make money. So we'll come into Up365, we'll come over to the search tab, and we'll type in the name of the company, GOOGL. This is also the ticker symbol. Tap on it and tap on it again to go to the company profile. We'll skip the security tab for right now and go straight to the business tab. Now to start, I'll give you a list of Google products. Now you can also look in Up365 to see this business description in this section right here. But you can also come down to the 10K report, tap on the latest 10K, come down to the business section, and you can see a full description of all Google's products and services. We'll go ahead and close this out for right now. Now I have to mention that in terms of making money, Google's biggest money maker by far is their advertising business. They generated over $209 billion in advertising revenue alone in 2021, which is over 80% of their total revenue. Now Google's next biggest money maker is the section called Other. These include YouTube's premium subscriptions and their hardware products like Fitbit. These businesses generated over $28 billion for Google in 2021. And the third largest section is Google's cloud business, which generated over $19 billion for the company in 2021. So overall, in terms of products and services to make money, I give Google a rating of 8 out of 10. Now I give it this high rating because advertising and cloud are great industries to be in. Companies will always need to advertise, and more companies are moving into the cloud. But I must say that the cloud business is not profitable yet. Now next we'll talk about Google's past growth. And for this, we'll look at the revenue, net income, earnings per share, and cash tabs. Now really quickly, I want to show you that once you look at the charts for each one, you can see that the charts go up and to the right, and they're all green. This is good. But now we'll get into the specifics, starting off with their revenue. So you see that the 5-year average growth rate is over 18%. This means that each year for the last 5 years, Google has been growing its revenue at over 18%. And this is good. It represents high growth. If this number was around 5%, it would be a slow grower, and this number would be yellow. Next, we'll come over and we'll look at the net income, and we see that the net income is even more impressive. So for the last 5 years, it's been growing at over 34% per year on average. Then we'll come over and we look at the earnings per share, and that's been even higher at over 36%. And this is higher than the net income because Google has likely been doing share buybacks. And lastly, we'll look at the free cash, so we see how they've been growing their free cash. And it's been growing at over 26% per year. So all in all, Google has been growing very fast. Now overall, for past growth, I give them a rating of 9 out of 10. I would give it a 10 out of 10, but 10 out of 10 is perfect. And this is due to very high growth rates for revenue, net income, earnings per share, and cash. Now the next thing we'll do is we'll go ahead and skip the news. If you want to look at the news, you can come in here and look at it on your own later. But we'll come over to the financial statements. And these are the income statement, the balance sheet, the cash flow statement, and we'll also throw in the margins. So starting off with the income statement, we can see that last year Google earned revenue of $258 billion, and their expenses amounted to only $182 billion, which gave them a net income or profit of $76 billion. So really quickly, we can skip over to the margins tab and we can see what kind of margin this represents. And this gives them a net profit margin of over 30%. So this means that for every dollar of revenue that Google brings in, they get to keep 30 cents as pure profit. So good, they're a strong, profitable company. Now next, we'll look at the balance sheet. So really quickly, we'll look at each of these charts. The balance sheet chart, the current assets and liabilities chart, and the debt to equity. And you can see with each of these charts, a majority of them are green. And this is always a good thing. But now we'll dive into each one and take a closer look. Okay, so we'll go ahead and look at the visual representation of their balance sheet. So we see that the last time they reported their balance sheet, they had assets amounting to $357 billion. And they had liabilities only amounting to $103 billion. So this gave them an equity or net worth of $254 billion. So that's good, that's great. Coming over to the current assets versus the current liabilities. So we see that the current assets are much greater than the current liabilities. So this is good. This gives us confidence that Google will be able to pay their bills in the next year. And then lastly, we can look at the equity versus their debt, the debt to equity. And this equity or the net worth was pulled from the first chart that we saw. And we see that their equity is much greater than their debt. So they have much more net worth than debt. And this is great. So all in all, their balance sheet looks solid. It looks very strong. And then next, we will look at the visual representation of the cash flow statement. So first off, we see OCF, which stands for operating cash flows. And we see that their operating cash flow for last year amounted to $91.7 billion. This is a great amount. Investing cash flow, you see that it's actually negative $35.5 billion. But this just means that Google is spending cash to invest in their self for future growth. So this is a good thing. And then next we see FinCF, which stands for financing cash flow. And we see that this is negative 61.4. But this is also a good thing. This means that Google is either buying back shares or paying back debt, these kind of activities. So it's good to see investing cash flow and financing cash flow are negative. It's good. And then last we see free cash. We've already seen a chart showing the free cash over time, but we see right here that the free cash amounted to $67 billion in 2021. So all in all, the cash flows look great. They have a lot of cash. So I'll give them a rating for each section. For the profitability, I'll give them a rating of 9 out of 10. They had very high profit margins. For the balance sheet, I'll also give them a rating of 9 out of 10. They had a very strong balance sheet, much more current assets than current liabilities. They had a very high net worth, and their debt amount was very small compared to their net worth. And then for the cash flow statement, I got to give them another 9 out of 10. They have a ton of cash, and this is cash they can use for future growth. Now, next we'll talk about Google's potential for future growth. Now, the first thing we need to consider when future growth is concerned is the amount of cash they have. This always helps a business to grow in the future if they have an immense amount of cash. Now, next, we can also think about their forward-thinking products. We have their AI business with DeepMind. We have their autonomous driving business with Waymo. And then we also have Google Cloud. Now, we saw that Google Cloud generated $19 billion in 2021, but it's still in its infancy. A lot of businesses have yet to convert over to the cloud. And once they do this means more money for Google. And that would mean more money for Google's competitors like Amazon and Microsoft, but we're focused on Google here. Now, as far as their rating for future growth, I'll leave this one blank, and I'll leave it up to you to leave it in the comments what you think their rating should be for future growth. Now, lastly, we'll look at the stock price, and we'll come back over to the tab that we skipped in the first place, which was the security tab. And the first thing you'll see is that Google is priced at over $2,200 per share. But if you're thinking that that's too expensive, just wait for a second. See, Google is actually doing a stock split in July of this year, and this price will be divided by about 20. So the price will be around $100 per share moving forward. Now, most people think that because a stock is over $2,000 per share, it's expensive, but it's really not. See, if you look at the price to earnings and price to free cash flow ratios, they show these green numbers, which means that they are pretty low. See, Google has a price to earnings ratio of 20.6 and a price to free cash flow ratio of 21.9. And this means you're getting a lot of bang for your buck. And throughout this video, we've seen how Google has strong financials. They've been growing a lot in the past at very high rates, and they're likely going to continue growing at high rates in the future. So at this price, Google is actually pretty cheap. When determining whether a stock is cheap or expensive, always look at these ratios. Don't just look at the stock price. So as far as their price rating, I'll give them an 8 out of 10. If it was at 15 times earnings, I'd give Google a 9 out of 10. But for this company, 20 times earnings is pretty good. If you want to learn more about how to use these two numbers before you buy your next stock, check the article out in the description below. Now to end off, I said I'll give you a little bit more information about Google, and I'll give you a first-hand experience. So 2 years ago, I had an idea for an app, but I didn't know the first thing about coding. So I went on to YouTube so I can learn how to code. I started coding from what I learned from YouTube, and anytime I had a question during my process, I would hop on Google so I could figure out my answer, and I would find my answer pretty quickly. Now, once we got the app going, we figured, hey, we want to be able to store some data. So we use Google Cloud to be able to store the data. And now we switch over to Firebase, which is another Google product, and we use Firebase to store our data. And then once the app was complete, we shipped it to the App Store and the Google Play Store so that billions of people around the world will be able to download it. All that to say, I give Google an overall rating of 9 out of 10. Okay, and now that you have a good bit of information about Google, whether or not you want to buy the stock is up to you. But I've shown you how you can use Up 365 to not only get information on Google, but you can also get information on every public company in the stock market. All you have to do is search the company, tap on it, and bring up the company profile. If you like the video, go ahead and like and subscribe. In the next video, I'll show you how to know if you're overpaying for stocks by looking at the price to earnings and price to free cash flow ratios. Happy investing. At this price, Google is actually pretty cheap.
So close.
So close.
You should take off your pants. I swear, you'll feel cooler. You don't want to see them. Okay, go. It's not stopped.
Okay. I've linked. I've listed. I put a